when I want information on what's happening in this industry, there's one person that I'm going to be looking to, right? And I think it's only fair. Most of you know her already, but without a doubt, one of the brightest minds in this industry. Come on out, Vivien Azer, Managing Director from Cowen. Thank you.
Hi, everybody. Oh my gosh, it's so good to see y'all. This is my first cannabis conference since COVID, and I'm delighted to be here. So yes, I am the Managing Director covering beverages, alcohol, and cannabis, tobacco and cannabis at Cowen. I want to talk to you guys for about 10 to 15 minutes. I am open to taking questions, so if you have questions, please feel free to come up to the mic. We're going to cover 3 key topics. Number 1, an update on the third quarter. We just published our 3Q21 preview this morning, so this is new information for everybody. Number 2, a regulatory update. Our colleague Jarrett Seberg published his regulatory update this morning. And then number 3, what to watch out for on a go-forward basis. So first, where are we? So obviously the cannabis stocks have been a little bit sluggish, and that does, we think, reflect the deceleration growth that we saw through the third quarter. We track every state that offers data either monthly or quarterly for medical and adult use, either revenues or volumetrically. 10 of those states have a complete data set for the third quarter through September 30th, and cumulatively, those states generated $2.8 billion in trackable revenue. It's about 50-50, medical versus adult use. The reality was that 3Q did slow. 3Q was up 4% over the second quarter, but second quarter sequential growth was up 17%. So there was a slowing in the marketplace. Well, what does that mean for the companies? We did lower our revenues across the board. We were looking for some modest sequential revenue growth, but I would remind you that a lot of the management teams in the space were already seeing the slowing when they reported earnings in late July and August, and they were guiding to flat. So relative to the expectations that have been set by the companies, not the end of the world. I think the better piece of information out of our analysis is what we saw in September specifically. So if you look at growth on a year-over-year perspective, obviously a lot of distortions, due to COVID that we want to be mindful of. But year-over-year growth in those 10 markets have been decelerating since March of 2021, off of very, very tough comps of over 100% growth. September was the first month where we saw year-over-year growth re-accelerate to plus 54%. So that keeps us a little bit more encouraged as we head into the fourth quarter for better growth from here. To be sure, COVID disruption had to be playing a role there, right? As people, who live in adult use markets go on holiday, perhaps going to a non-legal state, that's a week's worth of consumption that just disappeared. So we do think as we head back into the fall and as routines kind of settle in, we do expect continued growth in the category. That said, we did not raise our TAM given the flattening of the growth that we saw in the third quarter. So we continue to believe that in 2021, legal cannabis states will generate $25 billion in sales, and by 2025, we're looking for over $40 billion in sales. Importantly, from our outlook perspective, that only includes New York, New Jersey, and Pennsylvania. I will admittedly acknowledge that Pennsylvania is probably the biggest wild card there and presents about $1 billion of risk to our numbers. I know all of the MSOs have been pretty constructive on a pathway towards adult use in Pennsylvania. You can certainly see that in the cultivation plans for the public operators. But that's probably the wild card. New Jersey looks like it's well on track for next year. New York looks like it's well on track for 2023. So continued incremental growth for the industry just based on regulatory change that's already occurred. So, sticking with the theme of regulation, let's talk about federal regulation. So I benefit from having a handful of policy colleagues at Cowen in our Washington research group that partner with me on cannabis. Our banking and financial services analyst, Jarrett Seberg, does all of that work in terms of federal legislation, and he put out a very thoughtful update this morning that I thought you guys would benefit from hearing about. So, what Jarrett was looking at was really 2 key issues. Number 1 is safe banking. So obviously there's been some movement to amend safe banking to the defense bill. Jarrett does not think that makes sense. And the reason is, more often than not, when you have a topic that you want the Senate to make progress on, you only want them to do one vote. If safe banking gets attached to the defense bill, that's vote number 1. So then what's left in 2022? If Congress has already voted on cannabis, it takes the momentum out of real incremental change that really could be possible for 2022. And what would that look like? Well, that would be an amended version of safe banking, right? Safe banking, very straightforward, access to commercial banking, access to insurance. It's passed the House 5 times in a bipartisan way. But Sherrod Brown, who chairs the Senate committee, has said he doesn't like it. It doesn't have social equity. Well, social equity is continuously going to be the sticking point here, right? If you look at what was included in Booker, Schumer, Wyden, Jared would tell you that bill was, quote, written to fail. There was so much expungement language in it that we feel like you'd have a hard time finding 10 Republicans who would sign that legislation, and frankly, you'd probably have a hard time finding 50 Democrats to sign as well. So that really leaves safe banking as the only realistic vehicle in the 117th Congress. So you need an up or down vote on Booker, Schumer, Wyden next year. That fails, we think, and then that leaves you with an amended version of safe banking. The amendments that we think could come with that piece of legislation, a fix on 280E. That would be hugely transformative for the public stocks under my coverage. Access to capital markets, that obviously would be incredible from a liquidity standpoint. We've written about this exhaustively, but we do think that generally speaking, the multiples for the US multi-state operators are meaningfully depressed relative to the underlying fundamentals, and a lot of that just has to do with venue, because these stocks are trading on a secondary exchange on the CSE. We do think multiples have the potential to double just with a change in venue with a listing to the NYSE or the NASDAQ. And of course, you would need to see some social equity. So we don't think the defense bill is the right path. We think Congress should vote down Booker, Schumer, Wyden, and then redouble their efforts on an amended version of safe banking. Importantly, the 2022 legislative calendar is going to be dictated by the midterms, right? There becomes a point in the summer of 2022 where it becomes politically disadvantageous for Congress to pass legislation. It is better for them to campaign on the topic the closer you get to the midterms, unfortunately, and then pass legislation after the fact. So we don't rule out lame duck on an amended version of safe banking either. The other point that Jarrett made in his note that I wanted to share with you was Elizabeth Warren and Cory Booker's letter to the Department of Justice. So they authored a letter to the DOJ asking for essentially a descheduling. Elizabeth Warren has characterized it as decriminalization. That's not exactly what that is. It is asking the DOJ and HHS to work together to deschedule cannabis. That would not allow for interstate commerce, but it's going to take a really long time to get that done through those agencies. Jarrett thinks that that could run through the entirety of Biden's first term to affect change through that pathway. That being said, having Senators Warren and Booker engage with the DOJ, we think could create a little bit more momentum on the Senate side to actually get something done legislatively. So that's the state of affairs from a legislative and regulatory standpoint. So last point I want to cover before I take questions is on the outlook. So one of the other big themes that we think has weighed on the cannabis stocks over the course of the third quarter has been the discussion around price deflation. I think everyone's probably heard what's happened in markets like California, like Colorado. We highlighted some of that New Leaf Data Services data in the preview that we published this morning. The weighted average spot price of wholesale cannabis in the U.S. for the states that they monitor was down 8%, including double-digit declines in California and Colorado. Importantly, that data does not include Florida and Pennsylvania. That has been a big topic when we've been talking with investors. I think everyone knows, Truly very publicly acknowledged after closing the Harvest transaction that they were responsible kind of collectively as an organization for a lot of the discounting that we were hearing about in the Florida market. From an M&A accounting standpoint, the strategy makes sense. You want to discount Harvest inventory, sell as much as it is you can so you don't have to mark it up and put it on your balance sheet and take the gross margin hit in the first quarter that the transaction closed. Nonetheless, there are other operators in the market that have set their sights on disrupting Truliev's leading market share, and so that is something to be cognizant of. Similarly, we've heard the same conversations in Pennsylvania, where more and more capacity is coming online. Initially, it seems like a lot of the discounting and a lot of the competitive activity is happening at the lower price points in the category, and in particular, flower, without kind of a secondary knock-on effect on distillate-based products like vapes, edibles, and beverages. And so it does seem like pricing is holding up for higher end products. And then in essence, when you get more discounting at the low end, what you see is an expanding price gap in the portfolio or in any given category. That is something that you should expect to continue to see, we think. Certainly when we do our modeling, both for the $25 billion in 2021 and the over $40 billion that we expect 5 years from now, we absolutely assume that there's going to be annual price deflation. And that is without interstate commerce, right? When we eventually, who knows when down the road, get interstate commerce, that will be an additional headwind to be sure that you should be cognizant of from a pricing perspective. Not all bad news though, right? Because the companies are vertically integrated for their high-end products, and that looks like, at least for the time being, price elasticities are holding up quite well. And then for distillate-based products, if you're an MSO, it gives you the opportunity to go into the marketplace, buy your underlying API at a more attractive price than you can produce it, and then that creates a gross margin opportunity. To be sure, this is the traditional CPG model. Altria makes Marlboro cigarettes, they do not grow their own tobacco. Brown-Forman makes Jack Daniels, they do not grow their own corn. And so that is one of the long-term themes that we expect to see as the cannabis industry continues to mature and increasingly look like traditional consumer packaged goods industries that we've been covering for over a decade. So I've got about 9 minutes left. I'd really encourage you to ask questions, please. Yes.
If you don't mind, Vivien, I'm going to repeat the question. And thank you so much for asking that question. You guys, if you do have questions, we do have a mic here, right, as well. And I'll try to see if I can move that out into the room a bit further. But Vivien, just to repeat the question, your feelings on social equity, the need for addressing that, and your thoughts there.
Absolutely, it's critically important. You know, when we had our cannabis conference last year, obviously it was a virtual setting, we dedicated a number of different panels to diversity, inclusion, and social equity, and we're gonna be doing the same thing at our virtual conference this year, featuring the Last Prisoner Project, which Cowen partners with on that exact topic. Thank you. So I'm encouraged that all of the MSOs not only acknowledge the role that social equity plays in category development, but they're really putting their money where their mouth is. Troy just talked about that in his presentation. I think the other important thing that we need to acknowledge is that social equity license holders are good for the industry. These are customers, right? You know, when I put on my just sell-side equity hat, I say, okay, well, if you're a social equity license winner, what did you just win? You won the rights to create a box, a retail box, right? Just like if you went down to a bodega down the street. The bodega does not make their own potato chips, they don't make their own carbonated soft drinks and candy and confections, right? They take those from major suppliers that I cover, like Coke, Pepsi, Monster, and Keurig Dr. Pepper. So that's kind of the landscape that we envision. I think the unfortunate reality, just to close out the thought, is the amount of litigation that has really slowed down the rollout of social equity. I think that's just kind of an unfortunate reality. But I am very encouraged that with each new state that's transitioning from medical to adult use, New Jersey, New York absolutely are examples of that, that social equity is increasingly a feature of the transition from medical to adult use. Thank you for the question. Yes.
So to repeat the question, is there a tax consequence for having a standalone dispensary versus growing and selling?
Certainly. It keeps you from being able to access some of the accounting tools that some of the multi-state operators are able to utilize to insulate their gross margin by transferring as much of your COGS into separate entities as possible. So some of those tax strategies are probably not available to you. But again, you know, our sincere hope at Cowen is that an amended version of safe banking in 2022 would address 280E, and then that tax differential would go away.
Sorry, I couldn't quite hear that.
Yes. The effective tax rate is unusually high. To acknowledge your point, that's absolutely true. When we do our modeling, when I'm running a model for a tobacco company, I'm applying that to operating income, right? And it's a normal corporate tax rate. In cannabis, I'm applying it to gross profit, and our forward assumption is 25% of gross profits, which is onerous, to be sure. That's right. It is absolutely a challenge, which is why we think that Congress needs to make 280E a priority. Yes, please.
While we're on taxes, what about if, say, 90% taxes added to federal level to state taxes, which to me sort of means the black market becomes even more relevant in the cannabis industry going forward?
Certainly. So the question is, what happens if there's a federal tax on top of state taxes, and how does that impact consumer demand and the illicit market? Very, very fair point, to be sure. I think what we've seen thus far is that the further east of the Mississippi you go, the illicit cost of cannabis goes up, so that migrating consumers from the illicit market into the legal market is not nearly as challenging as what Troy referenced in California. I would say more broadly, as far as the federal excise tax is concerned, a lot of consumers are not aware of federal excise tax rates. For instance, if you bought a bottle of Jack Daniels, I think you'd be surprised to learn that 60% of that bottle is tax. The consumer just doesn't see that in the apparent pricing, right? So CPG companies that have exposure to a federal excise tax generally just pass that on to the consumer. The same thing is true in cigarettes. So what we generally see with disruptive excise taxes, and the introduction of a FET would fit that description, is that you get an exogenous shock from a volume perspective in year one, and then generally trends normalize. We haven't done a price elasticity analysis on cannabis, but just as a frame of reference, price elasticities in products like tobacco are minus 0.3 to minus 0.5, so relatively inelastic. We actually did ask a question in one of our recent proprietary surveys of 2,500 consumers nationally, 18 plus in the US. If your financial circumstances deteriorate, what would you be the most likely to cut back on? And I just asked about my categories: tobacco, alcohol, and cannabis. Cannabis was the lowest rated on that. So at least from that, kind of preliminary data read, it would suggest maybe there's some inelasticity to demand.
Any other questions for Vivien? All right, my friends, thank you so much for this. Vivien, you were wonderful. Thank you.
Thank you.
Really appreciate you being here.